Let's get your business news now. Devin Murrigan joining me in studio once more. Hello, Devin. So we're going to get more detail about the proposal on this pension fund, the state-managed fund that has everyone quite concerned.
It is a proposal that came from the Social Development Department. Didn't go down very well because there were some staggering percentages of tax ratings on there. They didn't, wasn't just a good to watch and see those numbers. So we had a few people react to that. We'll get some clarity on it. But here's the background. Treasury and COSATU are calling for calm, saying the proposed new state pension fund is not a policy yet. This is after many expressed their concern over the Social Development's Green Paper proposing a new national social security fund. The paper proposes making it mandatory for millions of employed people to pay up to 12% of their earnings into a state-managed fund. Treasury and COSATU say the Green Paper is still a discussion point that could take years before it's approved and gazetted. Well, those are the words from COSATU when we spoke to the General Secretary earlier. But private sector pension funds also facing a big hit if the new proposals from the Department of Social Development to reform the system go ahead. Treasury Deputy Director General Ismail Momaniat joins me now to give us more on this. Momo, thanks very much indeed for talking to us. One could see why there was so much anxiety over this proposal. So the private savings industry is not happy. Consumers feel they're already taxed. So you would understand why there was anxiety, even though this is a proposal.
Yes, Devin, and hi to all the viewers. No, absolutely, Devin. I think just being responsible for tax policy, the Treasury is keenly aware of any talk of increase in any tax, let alone have an additional 12%. I think just to put context, the proposals, this has come from a long process that's been going on for over a decade about how to improve the social security system in South Africa. There's a lot of inefficiencies, and more recently, these proposals have been discussed in NADLAC. And I think the problem was when the proposals were presented, it's as if it's going to happen tomorrow and as if it's a final proposal. But if you really look at the document from Social Development, it points out it's out for public consultation. And certainly a lot of the issues that they deal with, the kind of background was not sketched, that any of those proposals, firstly, are not law. This document has not been to Cabinet, and it still requires a lot of public consultation, both with, whether it's unions, retirement fund members, the industry, and all South Africans, frankly. There are some positive proposals, but one's got to understand the context, and it will require changes. So it's not like anybody's going to suddenly be hit by another 12% deduction. That's certainly not what's intended. And one certainly needs to look at how we also preserve what we have in the retirement industry and improve savings in South Africa.
I suppose also one of the points that got people a bit unsettled was the fact that, again, this might be seen as taxing our way into prosperity, albeit that this is not policy yet. And I think even the Treasury itself said that that type of move is unlikely to happen with such aggression, because the last thing you need is to tax people into not becoming economically active in the country.
No, Devin, it won't happen that way, certainly not. So I don't think that anybody should feel concerned. I think that what we've said is these are mere proposals at a very early stage. They're not even government's proposals as such. They reflect, the kind of views of many, whether it's government departments, stakeholders at NADLAC. It's aspirational in some respect. But what's not been done is to look at the trade-offs, how it will fit in. Is it realistic in terms of the fiscal framework? Does it take into account the current tax system? Does it take into account some of the positives in the retirement industry that we have? It hasn't really been tested for those or assessed for those. And certainly if even such proposals were on the table, before you can even proceed, you've got to do all of those assessments.
Yeah. And just finally, Mumba, before I let you go, and it's interesting you mentioned the current savings or security institutions that are held privately. Any reform to rebuild these programs, I would imagine, is not directed to any form of disruptions. I mean, it shouldn't affect existing contractual savings and life insurance, should it?
No, absolutely not. And that's why, you know, the previous interviews which we've had the last few weeks on preservation and getting greater coverage, auto-enrollment, getting a very limited withdrawals that we've been looking at, those are the proposals that will be put on the table and that are at a more advanced stage. And those are incremental. So we start off with what we have and how can we improve the system. And I should add, in all instances, the issue is to improve governance and make people feel that their savings are safe at all stages. I think that's a critical element to address. People are not going to save if they feel that they're not in control of their savings in some way or the other.
Deputy Director General of the Treasury, Ismail Momaniat, thanks very much indeed for talking to us.